Hey everybody, welcome back to another candid conversation with your CPA. I have Ginger Potthast today, no pun intended. She's a senior advisor on the corporate financing side for small businesses. She did it for a number of years outside of the cannabis industry, learned about the cannabis industry and got into it. And I obviously love everybody outside of the cannabis industry bringing their expertise to the much needed, in need cannabis industry. So I'll let you introduce yourself, Ginger, and we'll kick this podcast off.
Thanks. So my name's Ginger Potthast. We just put two and two together. So I'm glad I'm focusing on the cannabis industry. Everyone I've met in the cannabis industry is so cool and very entrepreneurish, and that's what I kind of am drawn to. I was a radio media person for 20 years, had my own marketing company, and I stumbled into this financing for small business because I have learned so much, and there's so many things that regular small businesses don't even know about. It'll kind of make you mad when you first start hearing about what the banks don't really want you to know. But hopefully, I can shed a little light on that and take it from there.
Awesome, awesome, and thank you. Because yeah, I think that's something that I want to call out is the cannabis industry is small business. A lot of the large pubcos get the headlines, the very flashy, quick expanding MSOs get the headlines, rightfully so. They're doing good things. But 80% of the business, in my experience, pro economics, is about 80% are less than 15 million in top line revenue. About 80% are, less than 50 employees, if not more than that. And so it's a small business industry. So services like yours are needed in larger type companies, your pubcos, your fortune type companies. They know about business credit scores. They know about banking relationships. They have whole teams dedicated to banking relationships and credit scores and all that good stuff. So if you just enlighten some of us that are, we're either small business, less than a million, less than 15 million, like why does my business credit score matter and what is it?
Got it. All right. This is the fun part, and I might stir some of you up.
They do it. We're in
Have
the true we
you?
trust.
Yeah, this is cool. So, I really didn't realize that there was a separate score for businesses. Shame on me, but guess what? When I talk to people, I find out most people don't know about this. You'll ask them what's your credit score, and they'll proudly say 700. And then I know they don't know about corporate credit because it's a whole different thing. It's 0 to 100 is the game. Okay. You get up to
Mm-hmm.
80 and you get up to 80 and you're living the dream. You're getting the low interest rates. You're being able to have, all sorts of lines of credit. You're in the 30s, which most people are, or less if they haven't concentrated on it. You're just kind of out of the game. You're not going to be taking it seriously. So corporate credit is
Okay.
important. You have to build it intentionally, and that's what my partners do. They basically help you build it. It's a few steps. It doesn't happen automatically. Why? Because only 7% of all the world reports to corporate credit. Yeah, 7%.
Okay.
So you just, you gotta pay attention to it. It's basically.
Right, right. It's like most businesses don't even have a credit score. And so just having a credit score, in theory, when speaking with sources of capital, it does bode well. It puts you ahead of the pack. It's like, okay, they've at least taken the time to consider how creditworthy they are, as opposed to just assuming how creditworthy they are, which I would argue most business owners just assume they are creditworthy because of their morals and intentions. And as we know in real business, I don't care much about your morals or intentions. I got to keep my job. So it's going to be, why did I grant this business credit? If it didn't have a worthy credit score, like I'm toast. And so
Right
there's this
on.
whole like bigger game being played in capital. On that note of 80s versus 30s, what are just one or three buckets, the main 2 to 3 buckets that impact your credit score? In my mind, I think of historical financial statements, historical ability to pay and preference to pay. How many times have you missed one? But what would you say are just the big buckets for your credit score? And obviously, once we know the buckets, we can kind of learn how to improve them. But what are the main buckets?
You're gonna be there's one bucket. There's one and only bucket for corporate
Okay.
credit. pay your bills on time or early. They do not care
Okay.
how much you use of your credit, like your personal does. They don't care really and truly. They're looking at you as a business, a healthy business, a responsible business. And if you've got a good corporate credit score, somebody else has done all their due diligence to get you there. Now, how do you get corporate credit? There's 125 reasons why you don't. And so what we do is we're going to kind of see where you are right now, do an analysis and say, okay, you don't have, you're using a cell phone for a business phone. I mean, there's all things that are automatic declines. Guess what? If you have a PO box, automatically decline. We do that in several weeks. We get you all squared away on that. But after you are on the road to having trade lines, which give you higher credit, you need at least 6 or 8 people you do business that give you credit right now. And we have those partners that we know are going to report. So we match you up with those. And then, like I said, once you're squared away, compliance wise, which is really pretty easy to do, we just got to do it together. And then you just keep your business in order. Keep your business in order. And this is not, yeah, you can negotiate your terms with the people that you're going to do trade with. Give yourself some leeway because stuff happens. I know. And it being a cash business, you sometimes need to do some
Mhm.
creative financing.
Okay. That makes sense. So then, like, all right, on that train of thought of once, how do you improve your credit score is pay your bills on time. Are we talking just about like vendors granting credit or, sources of capital granting lines of credit, loans? What type of bills are we talking about specifically?
All of it.
That's
All
fair.
of it.
All
What
of the bills.
as you get your credit score going up, you're at a 30. Nobody's even thinks you're a real business yet, okay? You may have an 800 personal credit score and that's great. And you will be signing a personal guarantee. The whole object to having corporate credit is to start separating yourself from personal guarantees. God
Wait.
forbid
That's
something happens, you don't want to lose your house.
And I'm learning here as well. So everybody along, this is great because personal guarantees stress a lot of people out, rightfully so. And in the cannabis industry, it's like it's hard for us to get away from them. But and I get it when it's a pre-revenue company, but when it's a post-revenue company that's 5 years in this game, 3 years in this game, 10 million plus in revenue, they should have a business credit score. And then by having an actual real business credit score, that then the business kind of becomes the guarantor, the ownership group no longer has to do those personal guarantees. Is that the goal?
Absolutely. And so we're looking at businesses anywhere from $500,000 to 10 million is basically the ones that we just can hit and do quickly. Their revenue could be 50 million, but we're talking about that's what they're cash flowing. That's kind of where they are. The issue becomes even a $20 million company that's a sole, it's one guy basically, and he's built this company to 500 employees or whatever. We have a guy that still had 7 corporate vehicles in his name. And he's like, I don't even know how to
Was it
get
his
out
credit
of
score?
this. I'll just wait till the leases are up. Right. So
Uh-huh.
separate is good in this case. Can you separate every single thing? No, but we can separate most of them. Definitely.
Okay, and that makes sense. The more bill, which again, like some of this stuff, like I just kind of chuckle because like outside of the cannabis industry and more established businesses, it's like known. It's like, well, yeah, of course, but it's weird and like because it's a startup industry. So all of these companies are startup companies with scrappy founders, scrappy ownership groups. And to your point, a lot of the bills are still in their name. And it's like, okay, like that's what we do on like onboarding. It's like, okay, where are the assets of the business? Where are the liabilities? Who are you banking with? Okay, why is this asset part of the business? Give me the paperwork. And then it has no name of the business. It's all one of the employees, one of the owners, one of the friends of the owners. You're like, that's not an asset of the business. Like, well, we only use it for business. It's like, yeah, but it's in somebody else's name. So like you're not these lease payments, all of this, like none of this is building your credit or even like the balance sheet. It's just a
Right.
weird expense that just goes out the window. Okay, and be knowing the cannabis industry, like that's the reality we live in. It's kind of this unique thing of like again for the people back home, like Ginger just explained, like the reason we put all of the bills in the business name, to build the credit score of the business. And you will be amazed how many companies hit 1, 5, 10 million in sales before they even think about some of this stuff. Rightfully so. Again, I love the business owners. I love the operators. So I always want to give them grace and patience. It's like you're driving sales, you're making sales fulfillment. I get it. Back office is it's an afterthought, but it's like they want to get a profitable company and then they'll worry about the back office. And like I always say, it's like, well, worrying about the back office is what makes you profitable. Like sales just drive sales. There's no profit in a sale. It's just guaranteed anyways. Whereas like back office does this. Anyways, I'm getting on a side tangent. So pay
You're so
your
excited. You're so
dude, I
excited.
because you speak my language, it amps me up. And I've had 3 espressos today. But on that note, so you get through working with Ginger, we get a credit score, we know what it is. Maybe we're established and it is a good credit score. Now we want to go to sources of capital. It's the name of the game in the cannabis industry. Nobody has reliable sources of capital. And as we know, again, like outside of the industry, capital just rolls up under capital management. We have a few lines of credit. Maybe there's a big CapEx expenditure in 2 years, and we're just working with the lenders to get the best rate. But it's just what we do. We're in cannabis, and we've gotten in this bad habit of like raising capital is this project, and we just do it one time. And it's like, no, it's not how this fucking works. So, but let's just use the example of like a mature cannabis company that gets it. They have a good business credit score. Then how do they interact with you to get to the sources of capital?
Well, we have through the platforms we have access to like 2,000 sources of income, and those are going to most likely wait until we get you up to that 80 score or not, but we can do it in 6 months if you put your mind to it with us, okay, or less. Big
Mm-hmm.
bucks. You want $2 to $5 million. You've been in business, you're cash flowing beautifully, but you don't want to pay high rates and you don't want a personal guarantee. That's where we can really come in. I've got access to capital that is in the billions. They love the cannabis industry because it's the fastest growing. No growing. God, I'm so good. I didn't even know it. So you're growing and you're the number one growing industry. So I've got access to the family offices and that kind of thing that really want to get into it in a big way. What they love is unique ways of doing business in the cannabis industry. You know,
Okay.
buying new equipment that is just coming out, things that make it innovative. In any business, they're looking for innovation. They invest in the people, not the numbers. So that's where you really can do well. If we
No, that makes
introduce you
sense.
to these people, you know, one of my partners is really, they do billions of dollars of business. They have a family office, and one of the partners' dad owns a bank. So this is not traditional it's not high interest rates. No, it might be equity, depending on what the deal is. We may do an equity deal. So those kind of access to that resources is really going to
Right?
be
Like,
open up to you after you get do your part.
man, the reason I get all excited because it's like this is what we do, and I guess like I'm shifting my focus. You know, currently it's like I'm trying to talk to more accountants and finance professionals because we are growing that dope CFO certified advisor, and so it's like people don't understand what tools they actually all have access to, and it's like I was just at Benzinga, and you can just see them all just trying to raise capital, running around. Then it's like, all right, well, let me see the financial statements and the tax returns, like just the basic due diligence. Like, what assets do you got? What's your cash flows? Like, they don't have anything they can present. And so, like, right now, I know a client that's trying to raise 3 million, and like they just got some form of financial statements, but they're that classic client. It's over 10 million. They have a head of sales trying to raise capital, but he's not trying to make the business worth lending to. He's just trying to find sources of capital. And I'm like, my guy, like sources of capital are everywhere. You can just go to Benzinga's website, go to MJ Unpacked. Sources of capital are not hard to find. A business worth lending to is hard to build. And so like it's even harder to find, it's like try to just do that every month and get the business to a point where it can be in the 80s, which luckily there's awesome companies like yours that'll just give you a step-by-step plan. You'll be there in 6 months. And then to your point, these capital management becomes so much more easier. So I guess that's why I get excited. It's like CFOs, CPAs, like if you want to make your lives easier and capital management be an actual thing that you can do, which like CFOs do capital management. If you can't do capital management and raise capital, you're a financial controller, a glorified accountant. So like you need to get to that point. This is what you do. Like you do all the boring stuff of making a company actually be at 80% business credit score. And like to your point, pay the bills on time. Like all this stuff that seems super easy and overlooked. And I get it. It's a tough time in the cannabis industry. There's cash flow issues, but like if you dial in your business, raising capital is like just something you do as part of capital management. It's not this big win. And again, I'll get off my soapbox because I just got back from Benzinga and like meeting you. And like, that's what, because we had a ton of business owners and it's like, well, yeah, we'll raise capital with you, but like, let us work with you because like I got to dial in your back office. I got to make sure your due diligence, like we can still do it in 2 to 3 months, but I'm not just going to introduce you to people if like your financial statements don't tie to your tax return. You haven't paid bills consistently on a regular basis. You don't even know what your terms are for payments. Like there's so much stuff that needs to happen on the front end of like, do you even have a payment process that like ensures that you pay on time? Have you negotiated terms? Like they haven't negotiated terms, they don't guarantee payments. But anyways, I digress. Let's put a nice little bow on this because this is like I feel like I want to build up business owners and not like call them out too much. But to your point, we're here to help.
That's right. Well,
Um,
what I love about your business too is that we are scrappy and we are, blazing a new trail, but it gets you beat down every once in a while. It does when you're just deny, and then nobody tells you why you're denied just for like a small cash flow help or whatever. The banks don't tell you that. They just denied. And then, probably you have personally guaranteed stuff and there's only so much you can personally guarantee. So then that's a natural stop. So you've got these two things kind of working against you. However, that emotional feeling of just, well, maybe I need to be in business 2 more years. You start you know, it's a dirty word, but you start really bothering yourself about, what if I done wrong? I mean, I do everything right, blah, blah, blah. There's 125 reasons why they are going to can't, not help you. We're going to cut to the chase. You're going to be putting your big girl panties on your big boy panties and being a real business. And it's not that hard. It is intentional and that's what we'll do. And so gone are those emotional things about like, I just guess I'm not worthy. I mean, that little guy in there telling you, well, maybe I
yeah.
shouldn't be. No, you're going to know why you're denied. We're going to build you up. We're going to get you to the places where you are not having a personal guarantee. Are you that little guy, Raymond?
Oh
It's
yeah, no, constantly. We're always like, I'm that little guy. Our clients are that little guy. It's like, man, like, why won't these people listen to me? So no, I like that idea because it's like, yes, we get just tactical and numbers and whatnot, but it is emotional business. Like it's hard, and I'm on the sales side, so it's like it's hard being told no for a living just to get these weird yeses every once in a while. That's the nature of the beast, so you just kind of know. But raising capital is emotionally taxing on founders. I've seen it. I've spoken with the founders. I've spoken with the operators. Like it sucks being told your business isn't worth it, you're not worth it, your idea is not worth it. So taking the emotional aspect of it out by just let's get to the numbers. Let's just do it this way. And it's just easier. On that note, we're entering into Q4, Ginger. It's an election year. What just kind of what are your thoughts on the future and just any like kind of advice for business owners looking to either get a credit score or improve their credit score to make sure they're ready for 2025 so they have sources of capital?
well, I like real stories, and we have a real story because you hooked me up with another dope CFO, wonderful person. Not only are we going to do the CFO's business to help them have that, but we're doing two businesses that are clients and they're actually related. These are businesses that are not one is a brand new one and one is a one that's been around for a while, and they both have the same need, and that is access to capital to get their back office in order. And we're going to do it along with this the business owner of CFO, and then I am looking forward to it. First thing we did was pull business scores, corporate scores for all of the entities, and they were in the C's, B minus, one was no credit at all. I would say once we get started, it will be a 4 to 5 month deal because I know your referral is going to keep on the clients to make sure they make the appointments. It's very intensive. For the first week, there's 4 coaching calls. Then after that, it goes to once a week. But you're constantly have someone that's going to hold your hand and do this for you. This isn't something you have to
Mhm.
figure out. It's nothing the CPAs have to figure out. They just need to encourage and be there for their clients. So
So you
if
have people
and
on your
fourth quarter
team?
is distracting. I know that people
Yeah,
are
I
like,
know.
well, they're holding on to their money. This is an investment in your business. If you think your business is going to survive after November 5th, then you still want to do this. And this is a great time to do it because everybody's getting their ducks in a row for next year. They're doing, projections. So this is a great thing. I would
Tax
say
time's coming
don't
up.
take
It's
the
like,
fourth quarter off. Don't wait and see. Take the bull by the horns, and we'd love to help you.
and I would say too, like again, CPAs, fractional CFOs, like we're all going to be gathering our years of financial statements, support for the tax return, blah, 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 blah. 80% of that is what you got to do to get your business credit score anyway. So try to, get two birds stoned at once. Just close your books
Exactly.
at the end of the year, file your taxes, take all of that 12 months worth of data as your starting point. Um, so no, that's awesome. I appreciate the insight, Ginger, as always. And yeah, we'll wrap this interview up right now. But again, just thanks again for your time. I think what you guys do is very fascinating. Like, I sometimes think it's cooler than the actual cannabis business owners themselves or the CPAs that
Oh,
service them. But no, you're doing really important stuff. And yeah, anybody if you're interested, Ginger, how do they reach out to you? How do they find you?
I think the best way is just to hit me on LinkedIn. Just that's probably the easiest, and it's Ginger Potthast, Potthast. I can give y'all my cell number. I'd be happy to do that. 832-858-4332. Maybe you could attach that when you send this
Yeah,
out.
yeah, we'll put it all like your email and everything in the links and the show notes and
Cool.
everything. So awesome. Thank you so much. Talk to you later, Ginger.
Enjoyed it. Thank you. Bye bye.